Hello, welcome back into the Road to Retirement podcast. Tony Marlette Jr. at Brookside Financial with Zach Padden at Anselmo and Company Law. How's it going, Zach?
I'm good today, Tony. How are you?
Very good. Appreciate all of our listeners tuning in again to listen to our ramblings about markets, economy, legal,
Yeah, they probably
estate
thought
planning.
they were lucky. They thought we were done there when we had that little hiatus for a few weeks. They were like,
Yeah,
"Oh, maybe we don't have to listen to them anymore."
yeah,
But sadly, we're back.
yes. We're going to have some guests coming on in the next few weeks. We'll have a realtor, real estate expert coming on to talk about the real estate market. We'll get an investment consultant at Gradient coming on as well. So we'll bring some guests on to lend some expertise to their respective areas, which are going to be relevant to everything that we talk about as well.
Yeah. In our office, though, coming up is Halloween, and we have a event coming up for our clients. So if you are a client listening and you want to go to Red Wagon with us on, ooh, let me check here,
I think it's the
October
28th.
28th at 4:30. Call
Yeah.
our office and reach out. I mean, we're gonna have a fall event there. There's gonna be hay rides,
Bring the
little bit of
kids,
games. Bring the
kids,
kids,
grandkids.
grandkids.
Yep.
More the merrier. It's gonna be a nice time for everybody. And Tony may dress up. That's what I'm hearing. He's gonna get a costume for it.
I'm going to dress up as Chris and Selmo. That's going to be my Halloween costume.
Although you were gonna match your kid. You could go as Toad Mater, and he could go as Lightning McQueen.
Yeah, well, he is going as I shouldn't spoil it, but he is going as Lightning McQueen. We went out at the Marblehead Halloween East Harbor Halloween last weekend. He was dressed up as Lightning McQueen. We had to fill his pumpkin bucket up like 3 times. That kid got so much candy, and he's 2.5. Some of it he can eat, some of it he can't. But I was telling him, I was telling Morgan in our office yesterday, the dad tax is in full effect at our house. That's a real thing. You're going to find that out very soon. The dad tax is very real.
What's your go-to candy from the bucket that you were getting?
Well, right now I haven't delved into any of the candy. I got to watch the sugar levels. I'm diabetic, but I like the goldfish. I like his
Oh,
goldfish. There's some really good snack crackers too. There's some Sesame Street crackers. There's some peanut butter flavored ones that he gets in these packages. And then like the Gerber animal crackers, of all things. Gerber animal crackers
not
are
an ad.
really good. Yeah, not an ad for Gerber.
If they
But
want to sponsor the podcast, we will take one.
we will allow it. Yep. But they're really good, of all things. You wouldn't think.
Yeah, I could see the goldfish though, because like once you start having them, they're like addicting. There must be something in their formula because
And they're not very big either. You can get a handful of them and, put a couple handfuls in your mouth and not feel like you're, gluttoning.
yeah, I saw somebody trying to make those homemade with less ingredients online. Didn't look the same.
Really?
Like, yeah, I mean, I know I'm all for less chemicals and products and everything, but
Right.
if the recipe's not broke, we're not fixing it.
Yeah. Yep. Lots of noise out there right now. Obviously, this isn't a political podcast, but you and I are not auditioning for jobs on cable news either. But a lot of noise out there with government shutdown, some stuff in the economy. So I thought we could talk today about what is actually involved in the economy versus the market. We're not going to get super deep here. I think everybody has an idea of what the market is. A lot of people think the market and the economy pretty much move in lockstep, which is not necessarily correct. We've had some clients come in that are concerned about the economy. I'll be honest. I think some of this, when people say stuff like that, I think some of it is political on either side of the aisle. If you come in, in reality, the economy has not been bad since COVID. We had a couple of, we had obviously high inflation over the last few years. That led to decreased spending, but for the most part, the market barely flinched. So that's an example right there of the economy not being in great shape, but earnings were spectacular. People kept spending and people were employed and making more money, and the wages were outpacing inflation. So essentially it just became null and void.
Yeah, and I think a lot of people just see one number, like they would see inflation, and that's all they would look at. Or
Right.
they look at growth. They wouldn't look at anything else. And I feel like a big thing with all this is you got to look at the big picture. And you can't just focus on one number because they all work together to make like the
Right.
right answer.
That's right. And a lot of the economic reports that are released once a month will have in there, net of inflation. So how did earnings outpace inflation, or did earnings outpace inflation? So if we look at the economy in its simplest form, what is the economy versus the market? So obviously with the market, that's where people go and buy investments. You go and buy stocks. You buy stocks of public companies, and that purchasing and selling, regardless of the rationale behind it, drives the markets up and down. So each market has an index. An index is a group of investments that are a statistical measurement of how the market is performing at a set time. As far as the economy goes, it's kind of like the sum of all activities that make up spending and spending money or producing assets or products in a country or a region or a market at a given time. So there used to be, I used to think, okay, the market perhaps is maybe 6 months ahead of the economy. I don't know anymore. I think maybe a month or two ahead,
Yeah, it's
because
definitely forward looking. And that's where a lot of people expect them to line up perfectly. But usually people are looking ahead. And that's where the stock market's always ahead.
that's right. Yeah, you're exactly right. So the market looks ahead, the economy looks back. So if you think about all those economic reports, we have some coming out next week that will say, well, hey, unemployment for the previous month was X. Inflation for the previous month was X. People buy stocks to look forward, but they use that economic data to make their decisions.
Yeah, and I think a lot of people don't realize like how those affect each other though.
Yeah,
And
I mean,
then go ahead.
I was going to say, if a company in the market, they could have a great quarter. You could have a great quarter. If you don't perform up to what was expected in your earnings report, then the stock typically goes down in value. So it's all of this projection. And it's like, I mean, we know who does these projections, but like, who are you to say that they should be here? They should be up. Well, earnings per share should be $50, and it came in at 48. I mean, $50 increased earnings per share sounds pretty good, but they only came up to 48. Stock usually goes down because it's considered a disappointment. So that's an example of an economic report. It's not necessarily an economic report in and of itself, but something in the economy that would be good news that's going to actually drag the market down because of projections or expectations.
I think one thing people sometimes forget, and maybe clients are going to be, or listeners are going to be like, Zach, I knew that already. Not every business is on the stock exchange. Not all businesses are publicly traded. So, with that, yes, the economy looks a certain way. Yes, the stock market looks a certain way. But we also have a ton of business in this country and in other countries that are not on the stock exchange. They're not publicly traded, and they're still going to affect the U.S. economy. Dollars are going to come in, dollars are going to be spent.
Mm-hmm.
So we can't just rely on just the stock market always as like a indicator of things.
Right. Yeah. So as of the most recent, just an example, as of the most recent employment summary, the news release from September, looking back, and I'm getting this straight from the Bureau of Labor Statistics. So this is just the data that everybody else puts the context to. Unemployment at 4.3%. Now you had some gains. They talk about gains. We had gains, interestingly, in healthcare, and you had losses, which again, probably not a huge surprise, in the government sector. Oil and gas had some net losses too. So you look at, one propping up another. And if you followed the election cycle last year, the Trump administration said, one of the things they said is they want the private sector to carry the economy, not the public sector. So they want the jobs, the non-government jobs. And one of the areas that they highlighted was healthcare. So as far as whether that's carrying the economy or not, we don't really know, but it's one of the things that's propping up the jobs report. And I don't think it's a secret to anybody. The government jobs have been a laggard.
Yeah. And with the shutdown right now, people are starting to get a little worried.
Well, yeah, and so that's the other thing too. We've always heard with the government shutdown, the market has shrugged it off. Again, whether that's fair or not, whether it's indicative of anything or not, the market has primarily shrugged this shutdown off. It's on day 9, I believe, day 8 maybe. Average cycle of these is 8 days, but the market's pretty much shrugged it off. But the interesting thing here is, and this could definitely affect the economy. So the thought has always been, well, furloughed workers are going to get back pay. So the economy might take a little bit of a hit during the shutdown, 0.1, 0.2%, but then we make up for that when workers get their back pay. So it kind of nets out even. There's been some talk about not giving back pay to certain government workers, what are considered the non-essential employees. If that's the case, and the economy does start to struggle, obviously you're not making that up on the back end.
Yeah.
And does the market shrug that off? Well, we don't know yet. There's a lot of things that the market is shrugging off right now. Tariffs are one of them. I've talked before about employers or companies, I should say, that are absorbing a lot of the tariff hits. And there's the actual tariff rate versus what companies are being assessed. Right now, that hasn't budged the market one bit negative, minus that initial drop that we had at the beginning of April.
It's interesting to see, though, because when everybody talked about those tariffs initially, it was everything was going to get passed on to the consumers. And a lot of these companies have realized that they couldn't do that. They're doing what's best, and I don't know if they'll be able to do it for the long term if these tariffs stay in place. But in the interim, they really have taken the hit to try to keep prices down as much as they can.
Right. The interesting thing, obviously, we talked last time, we're in the fourth quarter. With Christmas season coming up, with holiday shopping, say if tariffs are passed on, what wins? Is it going to be the higher prices with tariffs, or is it going to be the increase in people shopping? I think that'll be interesting to see.
Yeah. I'm curious I wish it was Black Friday of old when there used to be the lines outside, because you could have just taken a side-by-side screenshot of previous years at the mall, how many people were waiting in line versus the past. Now everything's online. So we're going to have to wait for the reports, but
right. Yeah, there's Cyber Monday and then all the Black Friday stuff. You're right. A lot of people, but some of that Black Friday stuff got out of control for a while. All those news reports of people getting hurt, trampled,
well, they could have ran faster. We are not condoning people getting trampled here, but it definitely did get out of hand quickly. It went from some great deals to, hey, there's 7 of these things and it's the hottest thing in the year and everybody's going to fight for it. And that wasn't the goal.
Yeah. I remember when the plasma screen TVs came out and the flat screen. Now everyone in America obviously has a flat screen TV now, at least one. Which always reminds me, speaking of Christmas, remember the scene in Elf where Peter Dinklage's character is doing the flex of he has a 70-inch flat screen TV in his house, and Buddy the Elf, Will Ferrell, was like, ooh. And it's like every house in America has multiple.
Yeah, now you get one at like Walmart for a couple $100 now.
Right. That's where I was going with this. Was I remember the first Black Friday deal. I picked up a plasma TV, flat screen TV, 50-inch, back around 2007, and I think I paid $1,400 for it, $1,500, something just insane. And guess what? That TV is still going strong.
Yeah, I just remember how heavy TVs used to be.
Mm-hmm.
You would get these TVs and like you would have strain your back basically lifting them up. Now they're just awkward because they're so big.
Yeah, that's just it. Like you could lift it on your own, but it's just cumbersome.
Yeah, which is great, but now everybody's mounts them.
Right.
Imagine mounting one of those old,
Oh, those box
the
TVs.
original box flat screen.
You start a fire.
Yeah, but it would look good.
Yeah, but at least you have a box TV mounted on your wall.
It's going to be interesting, though, how the holiday season will play out this year. I think you're right, because people are going to look at places where if they are struggling, where they can cut costs. And that's going to be a place I think you do.
Right. Overall, I mean, the market's setting, market's hit an all-time high. I don't think that's anything new. We've seen over the last 10 years or so, 8 to 10 years, markets pretty regularly setting new highs. And that's what should happen. So we should be getting highs, market highs, if you think about it. I mean, the S&P 500 from 1980 till 1997, it was fairly flat. It was up, but it was fairly flat. People today would not accept that because we're so used to this, 15 to 20% gains per year that expectations are completely out of whack. People forget that you should expect 3-5% drops every single year in the market. And for that to happen, it can still be a good year.
Yeah, once people start seeing drops, though, there's not a lot of knowledge, I think, of that sometimes. They see a drop, and then it just makes them get nervous. And
yeah,
I think Chris said it best the one day, if there weren't going to be drops, it wouldn't be a market.
That's right.
It can't just go up forever.
That's right.
When he said that at first, I was like, oh, that makes a lot of sense. But I mean, it really does hit home to people that like you gotta know your risk tolerance, and figure out what's going to be best for you.
Right. And part of this volatility, I think, is self-directed, do-it-yourself traders. I have nothing against that. I think there's a time and a place for it. But if you work with us, we'll help save you from yourself. We're not going to just buy and sell based on news, based on volatility, based on what CNN or Fox said. We're going to invest you to your overall goals, strategy, and time frame. And that brings us back to the economic part of this too, where you're probably, you could be like, well, how do I know where to deploy capital or put money in if all these different parts of the market are, moving and we don't know where anything's headed? Well, that's why we put a diverse strategy together for you to complement. One side complements the other. So we break everything down, put it into different buckets. It's okay if you don't understand each and every bucket of what we're doing, as long as you understand the goal being we're getting you to your goals based on the resources that we have. And we're taking advantage of different cycles. When one's down, the other one might be up. So the whole goal here is to reduce your risk through diversification too.
So you don't want people to put everything into one stock and roll the dice on that one stock. I mean, that's not recommended for clients.
Only if it's Bitcoin.
It's crazy, though, how so many people, and especially it's a lot of these companies give people stock options. And they retire and they have so much of their strategy all in one company.
Yeah.
And that's a hard thing then to get people to diversify. But over time, it's necessary so that in case that one stock tanks, they don't lose everything.
Yeah. No, that's a good point. I mean, we see that with a lot of local companies. Sherwin-Williams is one of them. And they're good company. These are good companies, but that's all it takes. Like I said before, that's all it takes is one disappointing earnings report, even if it's a good report, if it's not up to expectations, that's all it takes is just one for that stock to drop. And next thing you know, your account value could be down 10, 15% just in that one company. If you have too much of it, that's what we learned from the 07, 08 market crash too, was really diversification.
Yeah, and it's one of those things that's good to look at then your plan. Because like Tony said, risk is something that does happen in the market because there are going to be drops. Knowing where you're at in life, what your goals are, and what you're going to need, you got to figure out what the right risk is for you. And that's something that you guys always discuss with clients when you first set up a plan and you review that regularly, correct?
Yeah, absolutely. And that's part of the process. So I always tell people our financial plan is a living, breathing document. We update it all the time. When your life changes, we update the plan.
Yeah, which
Not
is
when the
good.
market changes, when your goals change, when your circumstances change.
Yeah, because when you're in our age and having young kids, you're going to think a lot differently than when it's time to retire and you're worried about the income streams and you're not wanting to worry about what the market did that week.
Right. That's right. So takeaways from today, the economy is actually minus, I think you could make an argument that the job situation, unemployment has been a little sticky, up around 4.3%. Inflation is around 2.8. So inflation costs have come down, and our long-term average around 2.5 is where the goal is. I think the economy is in good shape. Earnings, people keep spending. That's evidenced by the market going up. Earnings reports, 75% of them have just knocked it out of the park of the publicly traded companies. We may not get all the numbers that we normally get due to the government shutdown. I think that's the most pressing thing right now is the market shrugged off the shutdown. I'm curious to see what happens with furloughed workers and also how much longer tariffs can be absorbed by companies, especially with Christmas coming up.
But if you have questions about any of this or you want to learn more, you can give us a call at 216-485-1040. That's our Anselmo and Company line, or you can call us at Brookside Financial at 440-886-3550. You can find us on YouTube at Brookside Financial or our website at brooksidetax.com.
Yeah. And remember our Red Wagon event. Call our office, talk to Regina or Alexis about registering for that. It should be fun. It's a good fall event. We'll have some food, some drinks, costumes, bring the kids. Zach promised to dress up as Chris. So we're going to see if he has a job after that. Kidding. I don't think Chris would react that way.
Yeah, well, I'd rehire myself as Chris, so we'd be good.
There you go. All right. Anything else last minute that you want to add?
No, but if you see that you have anybody or any industries that you think would be interesting to learn more about on the podcast, leave us a comment, call the office, let us know, and we'll try to get somebody on from that sector so you can learn a little bit more.
All right. So for Zach Padden at Anselmo, I'm Tony Marlette Jr. at Brookside. Thank you, everybody. We'll talk to you soon.
Have a good one.